I want to teach you the strategy. I'm going to teach you the strategy that I used last week when I sent you 3 of my trade signals, and also Brandon does the same thing. Brandon actually has some other stuff he's working on as well that he may share later on, but this is the strategy that has historically won 70 to 80% of the time. This week, I took 3 trades. 3 trades, that's it. And I sent out 3 through Boyd Pips, and all of them won. And we're going to do a quick market review. I'm going to teach you the strategy. Those of you that are new, this is it. This is what you need to learn to be successful for the rest of your life. So if you're brand new tonight, or if you're brand new this week or this month, and you haven't learned yet a solid strategy to take you to the top, this is it. So pay close attention, get your pens and paper out, because we're about to learn something that's going to change your life. For those of you that have seen it before, just keep plugging in, rinsing and repeating, and learning as much as you can, all right? I'm going to go ahead and share my screen. All right, perfect. So if you are new, welcome to the IML I want you to write this website down. With the very basic package, you get access to the Harmonic Scanner. Now, they did a test on this. I don't know the exact numbers on it, but I believe it's pretty close to what I'm going to tell you. Okay? They did, with no analysis, just using the Harmonic Scanner, the entries, the exits, etc. Out of 1,000 trades, I believe that they won over 800 of them. Now, I don't know the exact number behind it. All I know is that's phenomenal. And what I have personally done with this, what Brandon's done with it, what so many other traders in the company have done with this very tool, it's changed their lives forever. So let's jump in. I'm going to teach you how to use this so that you can do the same exact thing. Whether you have a $100 account, a $1,000 account, a $10,000 account, or even a 6-figure account, plugging in and following these rules is going to continue to grow your account over time. Okay? Now on, it's only me and Brandon. You're going to be getting the most quality signals, whether it's 3 a week, 5 a week, however many, it's going to be quality, okay? Anyways, this is a harmonic pattern, and it's a high probability trade setup. And as you can see, especially new people, you're going to love this. It gives you an entry, and it gives you take profits, and it gives you a stop loss. Typically, I don't use this stop loss, and I'll show you why, but this finds your trades for you, so you don't have to sit down and scan the markets all day, especially because most people that are learning how to trade are still working a full-time job. And when you get home after a long day of 8 to 12 hours, depending on how often or how much you work, sitting down and looking at the markets is the last thing that you probably want to do. You want to get some food, shower, be with your family, and go to bed. So something like this, it's a time saver. It's a time saver, and it's going to bring you trade setups without you having to do all the hard work. Okay? And here is what you're going to use. Okay, you are going to use, let me minimize this one more time. I'm going to bring up my whiteboard here. Okay. Let me actually delete some of this stuff. Okay, time frames. I get a lot of questions about these. So I'm going to ask, what time frames do I use? I use the H1, H4, D1. Okay, so I use the hourly, the 4-hour, and the daily. For beginners, use the H1, which is the hourly chart. Okay, can everybody see this on the whiteboard? Okay, perfect. Okay, excellent. So these are the time frames that you're going to use. All right, so when you go to the Harmonic Scanner, you're going to notice it has the 15-minute time frame, and it also has the H1, H4, and sometimes we'll see one on the daily chart. But we're going to focus a lot on the hourly, okay? It's very easy to read. It follows good market structure. And for you to practice and understand trends and support and resistance, you're going to want to use the hourly chart, okay? And I'll keep jumping back and forth to the whiteboard, okay? Do you think you should still do your own analysis? Yes, and I'm going to teach you right now how to do that analysis, all right? And absolutely, yeah, so I know that you just wanted to ask, my man. No worries on it. We just want everyone to know that things are going to be amazing moving forward. So let's take a look at this. I'm going to share this with you again and show you how to do the analysis. So get your pens and paper ready. As you can see here on the left side, it says patterns. You open that up and it's going to give you these choices here. See these little circles? These are brokers, broker accounts. The closest one to the broker that I use, which is Hugo's Way, would be Trader's Way or JAFX. I specifically just like to use the Trader's Way one. It's always got a good amount of setups, and I like the broker, what do you call it? The swap fees, the commissions, the spread. It's very similar to the broker that I use, okay? As we open this up, you can see it says M15, which is 15-minute chart, and then it has the hourly, 4-hour, and the daily. That's what we're going to focus on. So when you want to find a trade setup, you're going to come over here, choose the broker, and select this little section, just like that. Open it up, and voila, what do we have? Currency pairs. Great Britain pound US dollar, the Euro USD, the USD Swiss franc, Aussie dollar, Canadian dollar, the Kiwi yen, etc. These little patterns that are popping up, if we click on one, that is a trade setup. And this right here, actually, as soon as the market opens on, I can tell you right now, we're going to take this one. As soon as the market opens on Sunday, we're going to be looking to take this trade, okay? So we found a trade. Just so that you know, when we have this open, the pairs near the top are more recent. The pairs at the bottom are older, but you can still go back and sometimes see that those trades have not triggered yet, okay? Anyways, let's jump right in to the strategy so you can learn how to do this, okay? The first thing that we're going to do is I want you to focus on 3 specific patterns, okay? I want you to focus on 3 specific patterns. So let's open this whiteboard again, okay? Here are the patterns you're going to focus on. Number 1, the shark pattern, okay? Number 2, the Gartley pattern. Number 3, the bat. These are the patterns that you're mainly going to focus on. Butterfly patterns are a thing. Crab patterns are a thing, but they have a different trading style to them, which I'll teach you later on. But we want to focus on these 3 because you'll see them often, and they're so powerful in the way that they move that you're almost always going to have success with them, okay? All right, so everybody, we will send the recording after. So shark, Gartley, and bat. These are the patterns you're going to want to focus on. So when we go back to the scanner, and you notice the one that I pulled up, we can see here that it is a bat pattern, which is a good pattern. That's one that we're going to want to use. As we look through these, you can see there are some crab patterns, butterfly, there are some sharks. Shark patterns are probably my favorite, and I've had the most success with them. They have 2 entry points, so they're a little bit more difficult to use. However, they do yield very good results, okay? So we found our pattern. We found a trade. It's a bat pattern. It's on the hourly. This looks like it could be a good setup. The first thing that you are going to want to do is see where the price is in relation to the entry point. Our entry right here, as you can see, is this green line right here, okay? Right there. See this green line that says entry? In fact, I'm going to make it bigger so you can know exactly where it is. And let's make it green. Okay, there we go. That's the entry. See where it says that? That's where we're looking to enter. As you go to maybe higher time frames or you scroll out, you will notice, okay, we're probably going to have to go to a higher time frame for this one, but this entry line right here that we're looking at is a line of support. Now, I want you to write this down, okay? And I'm going to go back and forth to the whiteboard so we can continue to take notes. So let me actually just keep the whiteboard open here, okay? Price moves between support and resistance. If you have not learned what support and resistance is yet, please study on the IML Academy, support and resistance, and you'll learn what it is, okay? Floors and ceilings, price moves in between those points. When we get to a support, either price will go up or we'll see it break through the support, but we won't enter yet. But what we're looking to do on harmonic patterns is we are waiting for the price to bounce off of either a support or a resistance line. That's what we're doing, okay? Price moves between support and resistance. So we go back over here. If this is a support line, we want to see price go up to our take profits. That's what we're looking for on a harmonic pattern, is a reversal, okay? Here is how we do our analysis to know if this is a good trade. Now, this is going to be very basic. We're not going to get into the advanced ways that you can do an analysis because there are very advanced ways that you can do it. But this is going to be a simple way that literally, without doing anything difficult, you can start making money and win 70 to 80% of the time. Statistically, historically proven, okay? I can't guarantee any future results. The market could go crazy at any moment, but historically that's what we've seen, and I'm pretty sure it's going to stick to doing what it's always done for the past 20, 40 years, okay? The very first thing that we are going to do, I'm going to give you step by step. Once we find a pattern, number one is we are going to find divergence. Now, just so you guys know how powerful divergence is, there are people, okay, Brandon's done this before as well, that they'll use only divergence on their trade ideas, even on price charts as low as 5 minutes. They'll use just divergence and they'll win almost all of their trades. So when we can find divergence on the harmonic scanner, now we're finding two huge confirmations. Number one is a harmonic pattern, which is a Fibonacci ratio. We'll get into that later. Number two, now we're looking for divergence. Some of you are probably wondering, what is divergence? What is that? I've never heard this word. Okay, let me show you. I'm going to teach you right now. All right. Here is how to find divergence. Divergence is very simple. And you can write this down. Divergence is when the price on the above chart is moving in the opposite direction of an indicator in the bottom chart. So down here, we are going to be finding RSI, which is the relative strength index here, you can see on the bottom. We're going to find divergence between this chart and the above chart. If price on the above chart is going one direction and price on the below chart is going the opposite direction, we have divergence, okay? And here's how we're going to find that. Let's take a look at this harmonic pattern. In order to find divergence, we are going to grab the Trendline tool. You don't have to because it's already doing a line automatically, but I'm going to do this so that you can see where I'm looking. You are going to connect X and D. And let me write that out. Actually, let me show you first, because this is going to give me a headache here. The whiteboard. Give me a second. Let me pull this up again. Okay, you guys can see the harmonic scanner. I'll do the whiteboard in a second. We're going to connect the line between X and D, just like this. Come down to X and scroll all the way over to D. Let me actually make this bigger so we can see it. Okay. There we go. Those of you watching, is that angling, is that line moving up or is it moving down? We've got one person saying up. Is everybody paying attention? Perfect. Okay. There we go. There we go. Everybody feel, I want you guys to feel comfortable that you can join in and type. Okay. Yes, it's moving up. Slightly up, but it's moving up. Whether it's just a little bit or a lot, it's still going up, right? So now that we see that this price is moving up, we want to see the price in the bottom chart. In order to have divergence, needs to be going the opposite direction. So it needs to be going down. We've got one going up, we need one going down. So let's take a look. I want to align the bottom chart with the top chart. So I'm going to grab this vertical line tool. Let's make it black. And I'm going to come down to the RSI. And there we go. I'm going to line it up with X. And then I'm going to grab another vertical line. I'm going to align with D, just like that. So now I'm aligning the RSI with the harmonic pattern on top. We're going to look at the same section of price to see where it's going. Now, once you get good at this, you're probably wondering, do I need to draw a line between X and D? Do I need to draw the vertical lines? Absolutely not. I am at a point, and you will be too after doing this just a few times, where you can pull up a chart and you won't need to draw a single line and you will see divergence. Okay? So let's find divergence now. Let's come back to the trend line. And now we're going to connect where the vertical line intersects the RSI with, on the X, with where the vertical line intersects the RSI on the D. Now, whether this one were to start down at this peak or where it's intersecting here, doesn't matter because it's still moving in the same direction, down. Now, does everybody see what I see here? Between X and D, we have the line moving up. And on the RSI down here, we have this line moving down. That is divergence. What this is doing is it's even showing us on the RSI. For those of you who do not know what this is, the RSI is showing us the average price movement over a 14-day period. Within the past 14-day period, this price is actually oversold. It's under where the average mark would be to be as far as price is moving. So it's most likely going to go up. This is divergence. Okay? Does everybody understand that? Now, if you don't understand it, let me just give you one quick other example. I'm going to draw over here. Actually, let's do this on the whiteboard, okay? Okay, let's draw a line. Here's divergence, okay? We have either a line going up and then a line going down, okay? That's divergence. Or it could be the opposite. It could be this line going down and this line going up. That would be divergence. Okay? That's what we're looking for. It's actually going to be called, there's a few different names for it. Hidden divergence, okay? There's bearish and bullish divergence. There's convergence. There's a few different things that we can get into, but for right now, all I want you guys to see is if it's doing this. And if it's doing this, then you're in a good spot. Okay? Because here's what it means. And let me actually, I'm going to show you which one I'm talking about. So I'm talking about this one first, right here. That shows that price on top, it's moving down, correct? And then this right here is showing that price is overbought. So where does it need to go? It needs to go down. It's the opposite with this one. Okay, this one shows that price is already moving up. So it's in somewhat of an uptrend, and this is showing that price is oversold, so it needs to go up. That's all we're looking for, okay? So if you see those, we've got divergence. Oh, you guys can't see the whiteboard? Oh, no. Shoot. Okay, give me 1 second. I apologize. What about now? Now can you see the whiteboard? No? Okay, give me 1 second.
Make sure, Jordan, that you have it set to desktop so that when you bring up the whiteboard, we can see it.
Okay, yeah, let me fix that real quick.
Because sometimes if you do share screen, but you have it to where it's only your browser, then it's
Right.
going to stay in the browser. If you have it set to desktop, then we should be able to see it.
Cool. You guys should be able to see this now. All right, there's that. Okay, and then let's bring up the whiteboard. You'll just see it on my end as well. Give me 1 second. Okay.
Yeah, it's good there now.
Okay, everybody can see this? All right, perfect. Sorry about that. Okay, so here's what we're looking for. Let me get this out of our way. Okay, so this is what you're looking for, divergence. That's the first step once we find a pattern. You've got right here where you can see my cursor. This is showing that the price on the top chart, it's moving down. And then this line on the RSI is showing that it's overbought, which means it needs to go down. Okay? You can see on this divergence pattern over here that the price on the top chart is in an uptrend. And on the RSI, it's oversold, so it needs to go up. That's all we're looking for, okay? When you see one of these, you have divergence in the market. When you have that confirmation, you can actually start getting ready to place a trade, okay? Perfect. Let's go to step 2. I'm actually going to move all of this stuff out of the way here. I'll just keep it down here so you can still get a visual idea of what we're looking for, okay? So once we've got divergence on one of these patterns, a sharp, Gartley, or a bat, we can go to step 2. Okay, and step 2 used to be that we would draw a trend line and wait for the trend to break. But what I want you guys to try is to just trust the scanner. Trust the scanner and start seeing how powerful it is to where you wouldn't even need to draw a trend line and wait for a trend break, okay? But to keep things safe, we're gonna go with the classic trend line, okay? Now let's open up again our Harmonic Scanner and show you what I mean. Okay, so we have divergence. Everybody can see that on the RSI and then on the chart here. Second thing that we're going to want to do is a trend line. And we're going to do the trend line on the actual chart. Okay, so we are looking at GBP USD. Grab our trend tool over here and let's draw a trend line. Just like that. Okay, now we've got a trend line. Now let me tell you something. We can do one of two things here. Let's read the chat, make sure everybody can see okay, perfect. You guys can all see, yeah, this thing is screwy. Okay, now you can see the desktop. Can you see the scanner? Okay, all right. Maybe I need to update my Zoom. I don't know. I apologize. That's super frustrating. Okay, there we go. All right. So step 2 is we're going to draw a trend line. So let me do this again for everybody. Come over here to the trend line. and we're going to draw this trend line. Just like that. That's the current trend that we're looking at. Okay? And here's what we're going to be looking for price to do. Either A, we don't even need the trend line. This is a strong support. We're just going to see the price move, go up. Okay? We'll start seeing it move, and it'll make its way up to our take profit. However, most of the time, what you are going to see is this. Is price will come out just like this, and then come back down, and then it will go up. Okay, just like this. And that's going to lead us into step 3. Now, I'm not going to get into details about how do you draw a trend line, because that's on the iMarketslive Academy. Okay? On the IML Academy, you can learn how to draw a trend line. All I want you to know is if we are looking for this price to go up, currently it's going to be in a downtrend. We can clearly see this is moving down. Okay? Once we have our trend line, in fact, just so that I'm not going back and forth between the whiteboard, I'm going to put all the notes right here. Okay? 1, divergence. 2, draw your trend line. 3, trend break. We're going to wait for price to break the trend. Okay? These are your simple steps to be able to trade on the Harmonic Scanner. When we see a price break, that's simply the price crossing through this trend line, which is an imaginary wall. Okay? Once it breaks through, we can get close to placing our trade. And then number 4, enter on retest. The retest is where the price comes back down, touches the trend line, and then we enter our buy. And there it goes. So I know I just went through that quick, and we're going to walk through this one more time so you know the strategy. And I'm going to show you on a different pair, okay? So I want everybody real quick. I want you to copy these notes here, and I'm going to copy them so I can put them on the new pair that we're going to go over. We're going to do divergence, draw a trend line if we have divergence, wait for price to break the trend, and then enter on the retest. When price retests the trend line, it goes back down and touches the trend line. Let's walk through it one more time. Let's go to a pair. Let's look at, this is a crab, so we're not going to look at this one right now. Let's look at NZD JPY. I can tell you right now, we don't have divergence on this one. Let me show you why. Let me show you we don't have divergence. Let's grab our trend line. See how between X and D, it's slightly going down. And then we come down to the RSI and we line everything up. See how that's also going down? That's not divergence. That's showing a continuation to where price may continue to just go down. Okay? So let's go to the next chart. If we don't get divergence, we don't have a trade. We're not going to do it. We want to find divergence. So let's go look at a new one. Let's look at, that's a butterfly. Although it's a butterfly, let's see if it has, no divergence. Let's look at AUD-CAD. Okay. Also no divergence, but this was actual convergence. We'll go into that later, but this was moving in the right direction of the trade, so this would have been a good trade. Let's forget about it. We want to find one that has what we're looking for. No. If this is the case where we can't get one, I'm going to go to the 15-minute and see if we can find one just for strategy's sake. Or we'll just redo the one we just did. Whatever you guys want to do. Let's look at GBP NZD. Here we go. There we go. This one we did have. We had some, this is actually a fantastic trade. Glad we pulled this up. All right, let's take a look and see what we got. All right, step one, let's write it out. There we go. I'm going to be more detailed on this. Find divergence, draw a trend line, wait for price to break trend, enter on retest. Good. Here we go, everybody. We've got a pattern here, and this is a shark with GBP NZD on the hourly chart. First things first, we are going to find divergence. So remember what we do? First things first, let's look between X and D. That's moving down. So first of all, if price is moving down, and we see that our take profits are moving down, this means that the overall trend on the higher time frames is moving down. Okay, there we go. Now let's line up our X with our D. There we go. See how these are moving in the opposite direction? That right there is a clear example of divergence. Now, some of you might be wondering, well, what about when it was up? What about this peak right here on the RSI, right here? Right there. That's actually this blue candle. This red bearish candle is lining up with where I drew the divergence, okay? We've got a clear divergence here. So we can go to step two, okay? Does everybody see this so far, how easy this is? Number one, find your pattern. Number two, draw a divergence. Number three, we're gonna draw our trend line so that we can wait for price to break the trend, just like Stevenson Lindor teaches on the bounce back. So here we go. Let's grab the trend line up here. I'm going to make this trend line, let's make it a different color. Let's do like an orangish color so that you guys can see the trend line. Here we go. There we go, that's our trend line. If you want to figure out how to draw a better trend, you could even come over here and change it to a line chart. Just like this, okay? And you could draw your trend that way. Okay, draw our trend. This right here, that's a trend fake out. That's why I'm still drawing it according to these candles, okay? But either way, what we want to see is on a higher time frame. So if we're on the hourly, we want to see on the 4-hour time frame, we want to see price break through this trend line. It's very simple. We want to see price come down, which is step 3, wait for price to break trend line. It will close below on a higher time frame, and I'll go over that in just a second. Then we want to see price do step 4, retest. It'll go back and it will touch that trend line one more time, and that's where we are going to enter a sell and ride this trade. So GBP NZD on the hourly chart right now is setting a trade up for us that we can take a look at when the market opens on Sunday. Now we got to be careful because this is Great Britain pound moving down, whereas that GBP USD one we just looked at, the pound is moving up. Here's the good news: the New Zealand dollar is it doesn't coordinate at all with the US dollar, so we could see opposite price movements in both of these pairs. Find divergence. We've got it. Between X and D, the line's moving down. On the RSI, the line's moving up. Step 2, draw the trend line. Here we go. Here's our orange trend line we drew. That's trending up. We want to wait for price, step 3, to break the trend line. See price come through. And then step 4, Price will retest and touch the trend line, then we enter a sell. That, my friends, is it. That's it. That's all you have to do. You do those 4 steps every single time, day in and day out, you will be successful. And I'm going to tell you right now that step 4 is extremely, extremely important. And here's why. Many of you have experienced where you will enter right here on the trend break. You can get a good 20 pips to 30 pips, just like you do on the bounce back. But if you're going for this 200 pip move, you've got to get in at the retest, which is up here. You've got to wait. If you're not going to be patient for that, it's going to bite your account right in the hiney, and you're going to regret getting in. Because guess what? This on GBP/NZD, this movement between here and here, I don't know if you guys can see that, but that is 81 pips between a trend break and a retest. 81 pips. That 81 pips could be a huge loss for you. That's why we want to have pinpoint entries and be patient. This is why I only sent out 3 trades this last week. Me personally, my signals, 3. Because I'm waiting until we get to these points where we know this is going to start moving in our direction. Okay? Just like Christopher Terry says, you've got to be a sniper waiting in the grass. You've got to wait to line that shot up. You've got 1 bullet. You've got 1 shot. Far too often, people will enter right here. The market will move against them, close out their trades. They'll blow their account if they're doing a huge lot size, whatever it is. And then guess what? They look at it a few days later, and they notice that this moved. Let's see how many pips. Oh, 320 pips in our direction. And they wonder, why didn't I get it? You weren't patient on the entry. Brandon can tell you this. Like more than 6 months ago, I was still pretty bad at what I was doing with this because I lacked the patience on the entry. I remember we placed these trades, like 4 or 5 of them. And I think like 3 of them, maybe 4 of them closed out. 3 days later, we look at the charts and realize that moved like 400 pips in our direction. But the trades closed out because we had too much drawdown between our entry and the retest. No patience equals no victory. Be patient, wait for those entries, okay? So again, step 1, when you find your trade, see if there's divergence. If there is, go to step 2, draw your trend line. Step 3, wait for price to break the trend line. And step 4, enter on a retest, okay? Now I'm gonna teach you one little tidbit before we jump off tonight because it is already, oh, it's like 11 o'clock Eastern right now. So one little tidbit. How in the world do you avoid this? A fake out. How do you avoid that? How do we know when price has actually closed below? Let me show you, okay? Sorry if you guys can hear the baby crying in the background. We've got a little 5-month-old and she's having a little hissy fit. Okay. And then I will, oh, so David, good question, real quick, everybody. Where do you set stop loss? Stop loss is 30 pips from where we enter, okay? 30 to 35 pips always from where you enter, okay? Stop loss equals 30 to 35. I'm going to type this to you guys, pips from entry. Thank you, Richard. I appreciate it. Okay, let's pull this up real quick. I'm going to teach you how you can avoid those fake outs. Oh, look at this. This is on the daily. I just want to check something real quick. Just so that you guys know where we're going to be entering this trade. Oh, here we go. There you go. This is going to be our entry, just so you know, is this 50% retracement. We can look to enter there on this trade on a GBP NZD, or we could look to enter right here at the 38.2, which is where it's showing on the harmonic scanner. So whichever one on the lower time frame meets a trend line, I'm going to call it the entry for it. So don't worry about it. We'll get there. But that's just a little bit more advanced. We'll look at that after. Okay. How do we avoid fake outs? Let's drop down to the hourly chart. Okay. Everybody remembers where we drew our trend line, right? Let me delete these, get these out of our way. Okay. On the harmonic scanner, we had a trend line here. Okay. Just like that. There's our trend line. Many people probably got caught right here by entering sells, and then look what happened. The market shot up. So this is a very simple fix. I want you to go to the 4-hour time frame after we've drawn our trend line. Okay. Line this up with these wicks here. Sorry, the baby's just screaming and yelling in the back. Okay. Here's how we can avoid this. On this higher time frame, we're not seeing this candlestick have complete closure through this trend line. And in fact, most of the times on a fake out on a higher time frame, you're going to see a big wick just sticking through. We want to see some solid movement on a higher time frame like this, where price comes through completely, retests, and then makes its move down. So when you go look on a higher time frame, if you're seeing something like this, or you're seeing a wick pop through, that's a fake out. Just ignore it. Don't even do anything with it yet. We want to see, we can literally wait. If we go to the hourly here, we can wait right here for 3, 4, or 5 candles to go below. Because remember, we're getting in on the retest. We're getting in right here. So we want to see price significantly come through on a higher time frame and then retest. Okay? I hope that that makes sense for everybody. That way you can avoid getting faked out by the market, especially on the bounce back strategy. Okay? That, my friends, ladies and gentlemen, is the 4-step process to the harmonic scanner. You do that until the day you die, and you will see consistent growth in your account. No doubt about it. I'm so confident in it that you guys this week, when we send trades, if you can be on your own harmonic scanner looking at the same trades, you're going to be successful. Practice makes perfect. Do this over and over and over again. Okay? Over and over and over again. Perfect, Josh. Yep. Simple, straightforward. It's to the point. 4 steps, everybody. 4 steps. And I'm going to leave you with this before we get off tonight. If you do not know how to draw a trend line, for whatever reason, you still can't do it, keep practicing. But you guys, guess what? You can get away with doing just that. Find divergence. When your price gets to the entry here, place a trade. That's how powerful the harmonic scanner is. There's a team in Mexico where that is all they do. Just divergence. Once they find divergence, they place a trade. So keep that in mind, you guys. We're working with the most powerful tools in the world, the most powerful tools in existence. Okay? Anyways, I don't know if Brandon's still on. But everybody, I want to thank you for getting on tonight. We're going to go ahead and close this out. Unfortunately, we don't have time for questions tonight, but keep practicing the strategy. I want you to go through this recording. We'll get it sent out to you as soon as we can.
Give it up for Jordan Combs. Jordan, awesome job as always.
Thank you, Brandon.
Hope that you guys like the simple, straightforward training that Jordan has given. We've got good stuff coming up this next week. I think, the whole saying is less is more, meaning that it's quality over quantity. It's not about the number of trades. It's really about the quality of the trade. So don't be so concerned about, am I going to get a trade idea today and that kind of stuff? Be thinking about, number one, learning the skill along with taking the trade ideas, because that's what's going to secure your future. So Guys, hope that you have an amazing Friday night. And I want to say to those who are across the globe and it's the middle of the night, thank you so much for being on. And those who are in the U.S., taking time out of your Friday night to be on, we appreciate your sacrifice. You will and are being rewarded for that. So this call has been recorded. So once it's done rendering, whether it's tonight or morning, I will make sure and get this out to everybody as always. And looking forward to crushing it this week. So again, Jordan, thank you to you. Great work.
Absolutely.
Guys, have an absolutely amazing night, and we will see you on the other side of massive pips. Talk to you soon.
Have a good night.